Every now and again, I share my full portfolio of all of my holdings and the percentage breakdown, and also what I'm doing with my portfolio. And this is one of those videos. I want to share with you in this video my entire portfolio, every single allocation that I own, and what I intend to do, and how my portfolio is going to change over the month of August and beyond. If you enjoy videos like this, please let me know and I'll make them more often. And with this video, I'm going to have it as a members only video to start with. And then perhaps after a week, I'll release it to the wider audience. So if you're seeing it early, thank you for supporting the channel. Let's jump right into it. This is my full portfolio. I've posted about this on Twitter a couple of times, and I don't think I've done videos of this nature where I'm talking about also my moves that I plan to do. I'm doing a little bit more trading than I otherwise would because I'm running the wheel on my portfolio. And so what you'll see is part of my portfolio is a long-term buy and hold, and I'll explain that. And then part of it rotates on a monthly basis. So I think me having the moves alongside my portfolio is also beneficial. I also included here, I've deleted a whole bunch of columns that obviously have the real amounts deleted, but I included the percentages as of the total pie, the profit and loss as it stands right now, and also what the positions are. Of course, position number one in terms of largest to smallest is SoFi. That sits at about 20% of my overall portfolios. You'll see here that this also includes cash and crypto and options trades as well, and I'll walk through those. So with SoFi, it's largely a buy and hold position for me. I'm very bullish on the prospects of the company. I'm really bullish on what they reported for Q2. I do have covered calls for SoFi that are underwater that would take this down from a 20% position to about a 15 or 16% position if those were to be assigned. But I'm confident that I can roll those out. I can manage that position. I've also been writing cash secured puts at the same strike price as my calls are for the same date. And I've been using that premium to buy back some of those calls. Not to mention that as recently as Friday, I wrote more cash secured puts on SoFi, and I'm using that premium as well to make sure that my covered calls do not get called away. So that's pretty much my only trade that I'm going to be making with SoFi over the course of this month. I like where my allocation is. I don't think I want to be buying more shares, but if I do buy more shares, they're going to be in my wheeling portfolio, which is a completely separate portfolio that I use for short-term trades. My SoFi position was actually double this in size, but that was in my wheeling portfolio, and those shares got called away in the high teens. And so right now, what you're seeing in my SoFi position is just my long-term position. Number two in the portfolio is Amazon. And Amazon is in my wheeling portfolio. As you can see here, I'm at a loss on Amazon because I just started buying it over the past week. And I bought in heavily before the earnings, and the earnings actually fell. And I've been buying much more past earnings. And I've been doing that through cash secured puts. I even have some open cash secured puts for Amazon as we speak. And so, probably as of next week, what you're going to see is the Amazon position is going to increase a little bit. And the total cash here, which is 13.8% of the portfolio, is going to decrease a little bit because the cash that I have here is cash secured puts on SoFi, cash secured puts on HIMS at $40 a share in September 19th, and also cash secured puts on Amazon. I think I have it 225 for next Friday. So we'll see if that gets hit. But if it does, then I'm obviously going to own more Amazon shares, and Amazon's going to climb to be a 16, 17% position for me. But again, with Amazon, I see it more as a store of value. And if I see a better opportunity in the market that I actually want to go in heavier in, I'm obviously going to pursue that. But with Amazon, I'm getting paid right now to enter in a position, and I'm obviously writing covered calls against Amazon. So this could very easily change. And this is similar with cash, right? Cash and Amazon, these are both in my wheeling portfolio. And so what you'll notice is that these positions will fluctuate probably the most out of this entire portfolio. Bitcoin is 11% of my portfolio. I haven't added to Bitcoin in quite a long time. It's a buy and hold position that I don't really look at all. I think I bought a little bit of Bitcoin in the summer of 2024, and that was like the last time that I bought Bitcoin. It's something that has ballooned. I mean, Bitcoin is up 275% for me since I bought it. It's just appreciated to be that large position. In terms of my HIMS position, it's 8.55%, even after the drop that we saw in HIMS. It's something that I want to keep holding on for the long term. But one thing I'll tell you about HIMS is I've been actively cutting these leaps. The leaps positions alone for HIMS is about 3% of the portfolio. It was about 4% of the portfolio. I cut some right before earnings just as a precautionary play. And I'm really glad that I did that because the stock fell quite a bit after earnings. and I'm keeping the rest, and I want to cut them a little bit once HIMS starts getting running again. And if HIMS falls back into the $40 range or in the $30 range, that's what I'm going to add to my leaps positions. I really see them being bound into a range where I'll sell the leaps for HIMS around $60 or $70 is when I trim them actively. And I've been doing that consistently. And then around $30 or $40, I'm an active buyer of HIMS leaps. Now, these leaps are strictly January 2027 leaps. So I have a little bit of time on them. And so that's how I'm planning to play the leaps. If HIMS rebounds to $55, $60 or higher, I will actively trim these leaps more and more aggressively because I eventually want to be out of them completely, with HIMS reporting an earnings that, in my opinion, was not the strongest that they could have reported. What I'm going to do with the money from those leaps is I'm probably going to buy more Nebius, and I'm probably going to buy more underlying shares in HIMS and probably some more hood as well. We'll see. But if I do an update like this next month, I hope to have a smaller leaps position than I currently do today. Now, you'll notice UNH here is 8.2% of my portfolio. Similar to Amazon, this has been a position that I've been actively buying through cash secured puts. I had cash secured puts at $250. I had cash secured puts at $275 and at $280. And so right now my position, I think, is like $267 cost basis. So I'm down about 10% on my position, and I have covered calls right now in my position. I also have more cash secured puts for UNH. And the thesis here is that this business is going to be turning around. It's going to be reverting to the mean in terms of where this is going. I plan on having this strictly as a trade. I do not want to be in this position over the long term. I am willing to hold this position for the next 2 years if that is what it takes. But I think that, if UNH goes to $300 in the next month, you'll see UNH not really existing in my portfolio. It's a very quick trade for me. If I can get 20% off of this and I can get paid to buy it through cash secured puts and paid to sell it through covered calls, I'm going to do that. And if I can pick up a dividend or two along the way, then so be it. And so UNH for me, I saw as an opportunistic play. I'm actually looking at the trade desk for similar reasons to see if there's money to be made on that rebound or that bounce. But I really have to see. So UNH, I listened to their earnings call. I mean, the CEO called it like it is. They're actively working to get the business back. And I think that they can get it back. It's just a matter of, do you have the patience for the stock to be able to rebound? So that's why UNH is so high. I definitely don't want it to be 8% of my portfolio. Tesla is about 7% of my portfolio. Of course, Tesla was for the longest time my largest position for the last 4 years or so. And then it slowly dropped my second largest position back in 2023, and then my third largest position. And eventually now it is my seventh largest position after I cut half of my Tesla. So one thing you'll notice here is I have a negative cost basis on this Tesla. And the reason is because I bought this in the wheeling portfolio. So I sold off all of my Tesla in the long-term portfolios, and I bought the Tesla in the wheeling portfolio. Now, with regards to this, if Tesla does explode from a technical perspective and goes to $400 and above on some type of rally, I am more than happy to let go of these shares and capitalize on those profits. I'm writing covered calls on those shares as we speak, covered calls at 365, 375, 385. And if Tesla does go down, then I'm going to start buying it back into my long-term position in the mid or low 200s. Around 250 to 350 is sort of a holding pattern for me with Tesla. And so if it does go higher, I'm going to sell off what I have in my wheeling portfolio. And if it does go lower, I'm going to buy it in my long-term portfolio and build up this percentage even higher. Okay, next we have Lemonade. It's 3.2% of my position. I've been trimming off some shares in the $50 range because it jumped up high. I had some covered calls get assigned, so it's now only 3.2% of my position. I'm up on it slightly. My cost basis is about $40 a share because I've also been averaging up. And so that, alongside having some covered calls called away, it just makes it so that I'm kind of close to where it's trading at right now because it's a position that I'm actively building. Now, with regards to Lemonade, I'm very comfortable with the allocation of where it is in my portfolio right now. I don't really want to build it up to be higher, but I also don't want to cut it down to be much lower than 3%. I think between 3 and 5% is the ideal range that I want to have this position at. 3%, we got HIMS leaps. I talked about those. In the 10th spot, we got Ethereum here, 2% of my position, up 125% on my ETH. Again, I bought this years ago, so it's not like, 2021, I just broke even finally with Ethereum. I've been buying Ethereum earlier than that. And you also have Solana here, which is the 14th largest position. just 0.86% of my portfolio. Similar story here with Bitcoin. I don't touch the Ethereum, I don't touch the Solana, and I don't touch the Bitcoin. And that means I don't buy them, and that also means I don't sell them. They just sit in the long-term portfolio, and I don't touch them at all. So I don't really want to, talk about them even more than that. SoFi Leaps up 413% on these SoFi Leaps. So I have some $10 calls for January of 2027. I also have $17 calls for January of 2026 with SoFi. Eventually, I want to get to a point where I'm going to be trimming these probably over the fall as we're getting close to some of the expiration dates for some of them, and maybe I'll convert them into more shares. So I think my strategy here is if the covered calls on my existing position get called away, so if somebody decides to assign early and I lose those shares, and in fact my SoFi position drops from 20, it drops to 15, then what I'm going to do is I'm going to take that cash and then I'm going to early assign on the leaps that I currently have and buy way more SoFi shares at $10 because I have $10 calls for 2027. So I have the privilege of buying SoFi at $10 a share in my cost basis. If I wanted to early assign, I can do that right now. So similar story with HIMS here. I want to delever somewhat from these levered plays, and I want to get this down to zero, and I want to get this one down to zero as well. Coming in at number 12, we have Pinterest. Pinterest just reported earnings, and that actually dropped me way down on Pinterest. It's something that I'm actively selling the wheel against, and it's something that I actively want to get out of. I don't want to be here in September 1st still holding a Pinterest position. I just want to sell it altogether and allocate that money into some stuff that I believe in more, such as Robinhood, which is 1.26% of my portfolio. I'm up 78.8% on Robinhood. CleanSpark, similar story here. I want to get out of my CleanSpark. CleanSpark was something that I got in the fall, and the thesis did not largely play out, and the stock has been going down. So I definitely want to be able to get out of my CleanSpark position. I just averaged down a little bit on CleanSpark, and I'm selling covered calls. And you got to keep in mind that with a lot of these positions, while the position itself may be in the negative, the revenue that I've gained from selling options every single week on those shares is something that more than makes up for it. And finally, we have the newest entrant of the portfolio, which is Nebius. It's something that I'm actively adding towards. I'm already up about 30% on Nebius. After I get rid of HIMS and after I get rid of CleanSpark, I want to add more Nebius, and I want to add more Robinhood, and I want to add more Lemonade. And overall, I just want my portfolio to be tighter, right? I don't want these leaps. I don't want Pinterest. I don't want CleanSpark. And I want to have more Nebius, more Hood, more Lemonade, have a strong 10 position portfolio. And then I can trade in and out with regards to the wheeling portfolio. In terms of the wheeling portfolio, I mean, this is where I'm going to show some numbers just to show you guys the power of the wheel as a strategy. So this is my premium income by month, which I've been tracking. Yes, there are some months that are negative. So this is like, when I'll get called away on, some shares like SoFi shares or whatever, or I want to buy them back or I roll them. I realize that profit whenever I roll, right? But largely speaking, I mean, I publicly started trading the wheel around the election period. And this is how my performance has been every single month since that time. What you'll notice here is you have some premium in August and in September, even though we're only on August 10th. And the reason is because I have open positions here. So these numbers are subject to change as the month progresses. I either am going to collect that full amount or I am going to have to buy back at some point in time. But yeah, I think it's pretty lucrative for me because all of these are positions that I've collected and locked in a profit on. And so that's why I say, like, when you see some positions here that are negative, keep in mind that I got paid to be entering these positions, and I will for sure get paid to leave those positions over time. And that's really what you see here. So again, this is a little bit of a mix because it's the long-term portfolio mixed in with short-term trades, mixed in with stuff that I'm wheeling and options. So it's a little bit of a mess. But if you guys want me to do these videos in the future, I'm happy to do them. And as I do them, I can also break out the different portfolios as to, what is in each portfolio so that you can see what's happening and how many changes there are, if any, on the long-term positions and how many changes there are monthly on the wheeling portfolio. Again, if you're seeing this video early, it means you are a member. Thank you so much for subscribing to the channel. I really appreciate that. And if you're seeing this probably a week later, consider subscribing and becoming a member, and then you can get early access to these videos. Thank you so much for watching. Hope you enjoyed. Let me know what you would do in my position. If you would add or cut any certain positions, I'd love to hear from you. I'm always open to learning more. And finally, let me know if you want to see more videos of this nature where I'm sharing my portfolio, and I'll see you in the next one.